Natural gas prices have started 2020 sliding once more, but are we finally getting to a level where we'll see natural gas starting to form a base? Hello, I'm David Jones from Capital.com. This is our first look for 2020 at the price of natural gas. We came into 2020 with it under pressure once again, sliding down towards that 2 level. Although the last week we have seen the price stabilize somewhat. In this video, we're going to have a quick catch up with what's been going on over the last month for natural gas. I'll come back, talk about the factors that are driving it, the big levels to watch. Then we will go back into the platform, look at things in a lot more depth, because I think it is a really interesting market down at these levels, and we'll get a trade on for January. As usual, if you're watching this and you haven't subscribed, if you can click on subscribe, support the channel, and we will continue to push out lots of timely content for all sorts of different markets through 2020. But let's catch up with what's been happening with natural gas over the last few weeks. So let's have a quick catch up with what's been happening with natural gas over the last month. So we've seen the price edge lower again, really traded as low as 207 beginning of the year, January the 3rd. And since then, we've been pretty sideways. It has continued that downtrend from early November, just ahead of 3. So the price is still weak. We're still in this downtrend, but I think where it's interesting, if we just take this chart out, I think these levels, these lows from back in August of 2019, just ahead of 2, could be really important. I'm going to talk a bit more about why we're seeing this continued weakness for gas. Then I'll come back. We'll look at things in a lot more detail and get our trade on. So we saw a really weak finish to the year for natural gas over the last couple of months. We saw the average for gas prices in 2019 hit a 3-year low, and many analysts are expecting that to continue into 2020 for the price to continue to weaken. One of the main drivers behind this is continued increasing production levels in the USA. Clearly, we've got a very simple supply and demand thing there. There's no shortage of natural gas as production levels rise. That is putting pressure on the price. But maybe in the short term, we'll have a bit of relief. Some are expecting cold air that's currently moving down from Canada to hit the US and bring temperatures down and pick up demand for natural gas. We'll see how that plays out. Let's look at the levels to watch though, because we are near some historical, really important levels for the natural gas price. So it's been tracking lower over recent months. The most important, I think, short-term level to watch is around about 235. That's the mid-December highs. But where it gets a lot more interesting is on the downside. So the price has traded as low as 207 so far in January 2020. Then after that, we've got the lows from August, and the really major support comes in at 2. Big psychological level for natural gas. Let's see if we can use this for a trade. Let's jump onto the platform and get a trade on for January. So let's look at things in a bit more detail. So let's just focus on the price first of all, then we'll add in some indicators. So we've continued this downtrend from the November highs ahead of 3 and traded as low, early Jan, as low as 207. I've got a 20-day moving average on here. You see, it does a pretty good job in natural gas, in the swings, in calling the turns. It moved below the 20-day moving average middle of November, so a couple of months ago now. And since then, it's done a pretty good job of holding the price down. At the moment, that 20-day moving average is coming in around about 220 for natural gas. So if we were to break above that moving average, then perhaps we can see some sort of recovery. I have to say, it's not looking like that at the moment. Let's add in some other indicators into the mix. So we've got the old favorite, the RSI, 10-day RSI. That has been oversold since the end of November. But a good lesson here that just because an RSI moves to an extreme doesn't necessarily mean the trend is going to change. And we have, of course, seen the price push lower. The RSI went oversold again in early Jan on that move down to 207. We do have some divergence building up on the RSI, bullish divergence. I do think this is worth taking note of. I'm not as much a fan of overbought, oversold, but when you see divergence on the RSI, so what that means is the market here is moving lower, but the RSI is making slightly higher lows. So it can be a suggestion that perhaps the weakness is running out of steam. Looking at the MACD, we had a buy signal on the MACD in middle of December. That didn't prove to be too useful. And again, the MACD has gone positive over the last few days. We are seeing those lines flipping over. You can see the MACD histogram has gone positive. So the indicators, are positive, but the price is still weak. But I think it is interesting down here. Let's just take this chart out a bit. I think 203 is still important support for the gas price. You know, when we saw it down at these levels in August, we did see the buyers come back in and the price get lifted by pretty much 50% into those November highs. So really, if natural gas is going to bounce from anywhere, then we are here. You know, if we start slipping below 2, you know, I think there could well be lots of stop losses below that level. You'd expect sentiment to turn bearish again, and the risk is for a much deeper sell-off. We've got to take the chart right back out. You know, the last time we were down below 2, we've got to go back almost 4 years, back to sort of April 2016, and the price did slip down to about 1.7 back then. So I think this 2 level really is bounce or bust time. Let's have a look at the short-term chart. So here's our hourly chart, and you can see it's been pretty flat after that initial move beginning of the year down to 207. We've been pretty flat since then. So let's say the trade. I think there's a couple of ways of playing this. I mean, one way is to do nothing and wait to see if we get some sort of decent movement, either up or down, signifying the next leg of the trend. I suppose one way of going with the trend is just to sell it now wherever it's trading now, around about 214. The tightest I would want my stop loss, probably above these highs, these 218 highs for the year so far. Or of course, the other option is to be a buyer with stops the other side of 2. So really banking on these lows at 203 from August holding and the psychological level at 2 holding as well. What I'm going to do, because the price action is quite choppy here, I'm going to place an order to do a trade. If the market slips back to maybe 211, I'm going to be a buyer. I'm going to put my stop loss the other side of 2. So I'm banking on these, the 203, 2 levels, holding and some sort of recovery from natural gas. But if it breaks below 2, I want to be out. Let's set that trade up. So I want to be a buyer at around about 211. So I'm going to buy when price is 211 in my order ticket. For stop losses, I want to go the other side of 2. I'm going to go 187 for a stop. Let's put that in. So at the moment, the risk on this trade, if I'm a buyer of 1220 at 211 with a stop at 187, my risk is £224. Normally on these trades, we risk losing a couple of £100. Let me just adjust that size down slightly. So I've knocked the size down to 1090. So if I buy 1090 at 211 with a stop at 187, my risk is just over £200. So that's it. Let's get that trade on. So as usual, we get the confirmation bottom left. Our order is in. And really, I think it might slip a bit lower from here. I want to try and take advantage of any short-term sell-off, but I'm banking on those levels holding and natural gas trying to build some sort of recovery from here. But I think we really do need to break above 218 to find any sort of momentum. So I don't think it's the greatest trade in the world, but I think it's an interesting opportunity because 2 has been such a big level. If we go into the portfolio, we've got a whole bunch of trades in here, but where I want to go to is the orders section up here. So we've got a couple of orders sitting in for gold and crude oil. And here's the latest. Here's the natural gas order, buying 1090 at 211 with a stop loss 24 cents below that. So I'm quite happy for that order to sit there. It's been a bit of a dull week or so. We have seen the price slip lower over the last month, and now the bet is to see whether that 2 level holds. So it does look to be bounce or bust time for the natural gas price. We'll come back and see how things are doing. But for now, for this update, we'll leave it there. So from me, David Jones and Capital.com, good luck with your trading.